Hi, this is Charlie giving you your midweek video. We're not going to be doing an education type video today. We are going to look at the stock markets because they are obviously of vital interest to most of us at the moment. It's fascinating seeing what's going on here with the stock markets all around the world, really. I'm just going to be looking at the S&P and maybe the Dow here, but this is the S&P futures market, the futures, which is a reflection of the cash market, and so we're going to have a look at this. Now, the eternal question at the moment is: have we got a crash coming in the stock markets, or is this just a correction and a pullback? We've got pullback, nearly 10% now. Well, we're going to have a look through that. But firstly, and we've been quite lucky with our swing traders. I've managed to short the S&P up here. We got fortunate, but there was a big breadth breakdown. So when we were coming up, this is the monthly chart, when we were coming up into the end of the summer, into September, we did have a breadth breakdown and some other indicators that we use. And so we shorted up here. We closed off down here at 2740 zone. Got very lucky on our entry and exit. Then got short again right here, literally just a couple of weeks ago, with our appers. And we have now just hedged a couple of days or so ago. We've just hedged the short now, so we're net flat at the moment, and we'll see what we're going to do with that. But so the S&P and the Dow, they've had this nice moves down. Have we got a lot more downside to come, or have we got a big bounce coming? Are we going to break up to new highs, etc., etc.? Well, let's have a look at some statistics, because of course, when people start getting fearful, traditionally that's the time to buy in. And what I'd like to see is a bit more of a bounce. And a bounce, when you've had this volatility, a bounce could last for months. It could last, and yet it's still just a bounce within the context of this prior move. Because as you can see, usually what happens is when markets are going up, they don't move as much when they're going up as they do when they're moving down. So this thing could bounce around for a couple of months into the end of the year. Market settles down, and then maybe we start to come off again, maybe at the end of the year, depending on what the Fed does. So there's some statistics. So let's bring up, this is quite an interesting one here. This was put together by Sentiment Trader. And what they said is that every time there's been 115 put options for every 100 call options, so an excessive amount of people buying puts. Puts, just so you know, for those of you who don't know, put options are a wager, a bet, so to speak. You're buying put option banking on the market going down, so you'll make money as the market goes down. And so if there's an excessive amount of people buying that over people who are buying call options, that's people who think the market's going to go up, then we can get an extreme. And what they've noted is that every time we get to that level, which is where we're at right now, 2 months later, there's a 90% probability that the stock market, or the S&P, which is the broadest stock market in the US by market cap as well, is up, what, 4.5% or so. Now, that's not 100%, it's 90%, but it's still quite an interesting statistic, and that's since 2006. Okay, since 2006. So every time, you can see these red dots on here, every time we've had a bit of a blip. This is this monthly chart, so you're not really getting to see too much detail of this chart, but certainly every time the put-call ratio gets too high, then within 2 months the stock market is higher. It's not to say it can't roll back over again, because look here, we had the red dot, it went higher, but then it's rolled back over again. So it's not to say that it can't roll back over again. It's just a statistic, which is quite interesting, that when you get to that excessive amount of pessimism, or certainly amongst options traders, then quite often there's a bounce coming within 2 months. So we shall see on that. That's an interesting stat. What's also been of interest is that I don't think it's never happened in 50 years in the stock market where you've had 6 months up, at least 6 months up. Have we ever then had a bear market start directly after 6 months of up? So usually when you get this type of price action, normally it does suggest it's just a correction rather than any sort of major bear market. Okay, because normally what happens with bear markets is they start a little bit softer than that. They don't actually just crater like well, I say crater, but come down as sharply as we have done recently. So there's some statistics to suggest that the stock markets may not be going directly lower right now, but you never know. They're just statistics after all. Then nothing's 100%. So what's my view? I would love the stock markets to come higher, and because then I will be adding to my shorts. So I'm well aware that we could bounce and bounce for maybe several weeks. And that doesn't mean to say the market has to just keep going up and up and up continuously for several weeks. It could come up a bit, pull back, and start to chop around. If we go back to what happened earlier this year, then look what happened. We came down. We then retested the low. Then we chopped up. Then came back down again. And it's that type of thing. It doesn't necessarily mean that the stock market has to just go directly up. And what will happen is the longer it takes, then the more settled people get. People start to forget about this, and if in a month's time, let's say the S&P is back up here, it's been coming up a bit, and down and up and down, and in a month or so's time, the S&P is back over here. Then people start to forget very quickly. Investors start to forget about this, and that's when people start talking about, oh, okay, it's probably going to go to new highs now. Maybe it does, but very often that's what happens, is you need that sort of sentiment where people start thinking that way, and then the market gradually sort of creeps back over. So I still think that the fundamentals are in place, with earnings being what they have been. There's been a drop in the earnings performance this year in the US. Trade wars, the Federal Reserve raising interest rates, and other economies looking to do that as well. That doesn't favour stock market outperformance. So as bonds start to perform better, so we shall see. Obviously, we always have to have caveats, but that I'm just giving you an idea of what I'm personally going to be doing. Is that it might take some time, but if it does bounce enough, then I'll be adding to my shorts. In the meantime, I don't have to worry, concern myself. I'm already short. I've got a hedge in place, and at some point I'll release that hedge. But that's my idea for the stock markets. And where do I think they might go? Coming back out to the S&P, I'm just giving you a general heads up here. I've got an old trend channel here, which was in place from the 2009, not from the lows, but once we made our low here. So I've had this trend channel out on since about 2012 or so, and it's still there. And so ultimately I'd like to see the S&P work its way down to this lower trend line here. That would be nice to see. I don't know if we're going to get it, and I don't know how long it would take, but it could take months and months and months for that to play out. And obviously with each month that passes, that trend line rises. So that's my overall plan there for the stock markets. I still think that there could well be a little bit more of a correction after a 9-year bull market. Probably got a bit more of a correction to come. Not looking for a massive, huge bear market, but just a bit more of a correction. Let's put it into context. I think the Dow's down maybe 10% at the moment. Just about. That really isn't a lot. It's just a correction territory. I'm not looking for beyond sort of 20 odd percent at all. But certainly I think they have the ability to come down a little bit more yet. Anyway, I shall stop blabbering on. That is the midweek update, and I'll be back on Friday for live trading.